Welcome to another S&P 500 analysis on this ETF, the SPY. Today is August 7, 2022. In this coming week, we are expecting the latest number on inflation, and on Wednesday, in the morning before the market open, we'll get the latest CPI numbers, and depending on these numbers, the market will make its move accordingly. In this video, we'll analyze the S&P 500 ETF, the SPY, the Nasdaq 100 ETF, the QQQ, and the Russell 2000 ETF IWM for potential price level to watch and price scenarios to prepare for the coming week. In addition, we'll also analyze the two FANG stocks, Apple and Tesla. Stay tuned. Before I begin, if you like the contents in this video, be sure to click the thumbs up to give it a like, and this will also help promote this video on YouTube. And if you have not subscribed to this channel, click the subscribe and the notification icon. And finally, if you have any questions or comments, please post them in the comment section below. Let's first review the price move from the last week, then we move on to this week's analysis. Starting with the SPY, it dipped down to the lower range of the expected move in the early part of last week, then it bounced back up to this resistance zone near the 415 level, which is also near the upper edge of this high volume zone. Then it fell back to the VPOX on a better than expected non-farm payroll number before a short squeeze took hold and ended the week near the middle of this high volume zone and also near the middle of the expected move. The QQQ booked this resistance zone and popped above the upper range of the weekly expected move, then backtest this resistance zone before it moved back up and closed near the upper range of the expected move. The IWM continued with its recent uptrend and closed at the upper range of the weekly expected move and near the upper edge of this resistance zone near 192. I did not cover Apple and Tesla on the last Trade Watch video, but I will do so again in this video. So I'm going to give a quick review on the price action from last week just for continuity's sake. Apple continued to move higher and it tagged the upper range of the weekly expected move and this resistance zone. It closed just a bit inside of this resistance zone. Tesla also continued its upward move last week until Friday. During the course of last week, Tesla booked the resistance zone near 875 and proceeded up to tag the upper range of the expected move before the sell-off on Friday. It closed the week back below this resistance zone that it broke earlier. And that's the recap on the price action from last week. Now let's see what we can expect and what to prepare for the coming week for the SPY, QQQ, IWM, Apple, and Tesla. Let's take a look at the daily chart for the SPY. We see it bump up against this resistance zone, and then they put in an inside day and followed by a failed inside day breakdown. The following support and resistance zone are still valid and should be monitored. The resistance zone are 415 to 417 and also 426.50 to 428. And the support zones are 392.50 and 389.50 and 384.75 to 382.50. Now let's take a more granular look at the SPY on the 60-minute chart. Let me put the composite volume profile back on so I can show you where all these zones came from. Notice these extended price zone. They are the support and resistance zone we have identified on the daily chart, which we just looked at. And with this composite volume profile back on, I have highlighted some of the high volume zone, or sometimes I call them balance area. These are the zones the price will most likely move toward as they represent price levels with high liquidity. And if you're unfamiliar with volume profile, I have made a couple of videos on explaining the volume profile and how to trade some of the characteristics of the volume profile. You will find the links to these videos in the description below and on the screen at the end of this video. Here are the high volume zone. There's one here at the 429.65 to 426.25. And here's another zone at 416 to 408, and another one at 397 to 386. Now let me put up the daily volume profile and see where some of the naked POC or version point of control, these are the price level for each trading session where you traded the most volume. Now on Friday, the POC is near this 413.43. And there's another POC just underneath it near the 409.25 and another at the lower level near 406. And notice there is not a POC at the version point of control above the Friday's close until it reaches all the way up here to the level near 438.25. And here are the range for the weekly expected move. The upper range is between 425 and 425.50, very tight upper range. And the lower range is between 405 to 401, quite large, so there seems to be more skew toward the downside for the coming week. Okay, with all these level and zone identified, let's see where the price could be headed in the coming week. Now, my expectation is for the price to chop around within this high volume zone until the CPI is released. Then if the market reacts favorably, the price could move above this resistance zone near the 417 and toward the upper range near the 425 level. And if we move above this upper range, then look for the high volume zone up here and the resistance zone near 426 to get tested. And if the market reacts negatively to the CPI, then look for the price to come down to test this lower edge of this high volume zone near 408. Then watch for a possible break below this trend line. And if it does, then the lower range zone will be in play between this 405 and 401. And watch it to move down to the 401 level. And if the market really disappointed at the CPI, then it could dip below 400 and move toward this high volume zone down here at 396. So these are the possible price level and price movement to keep an eye on for next week for the SPY. Now stick around until the end of this video. I will give you a possible strategy to explore on the weekly NR7 candle I have mentioned in my weekly S&P 500 analysis video. On this daily chart of the QQQ, we see the price broke above this resistance zone and stay above this resistance zone near 318. And here's a resistance zone to watch between 334.75 and 337.50. Support zone to keep an eye on also is 318 to 312 and 299 to 296. For next week, the upper range of the expected move is between 332 to 333.75, and the lower range is 312.70 to 309.50. Now let's take a look at this 60-minute chart for the QQQ. These are the high volume zone I have highlighted from this composite volume profile, and they should be monitored for the coming week. This zone up here at 347 to 338. The 321.50 to 316.75, and this one here at 308 to 305.25, and 304 to 297. In addition to that, there is also this low volume node up here near the 330, and which also in confluence with the upper range zone. Here are some of the VPOCs to watch for next week. There's the 323.75, 314.30, and also this one at 309.45. My expectation for the beginning of next week will be choppy until the release of the CPI. It could chop around between this high volume zone and also this resistance support zone. After the CPI release, then the possible upside move is toward this low volume zone and this upper range near the 330. Then possibly test the resistance zone up here near this 334.75. If the market reacts negatively, then look for the price to move into this lower range zone and proceed down to this high volume zone between 308 and 305. On this daily chart of the IWM, we see the price came up to this resistance zone between 188 and 191.50 and closed near the top of this resistance zone. For next week, we'll continue to watch this zone for possible resistance turn to support. And there is a possible support zone down here near 183.50 to 181.30. And here the range from the weekly expected move. The upper range will be between 194 to 195.50, and the lower range will be between 186 to 184.50. On the 60-minute chart, here are the high volume zone from the composite volume profile. 201.60 to 196.30, and 188.60 to 184.50. And another one here at 178.80 to 174. And here are some of the VPOCs to watch: 193.40, 197.70, and 181. And once again, we'll be looking for the price to chop inside of this resistance zone until after the CPI release. Then on a positive move, we'll look for the IWM to break this resistance and then move above this resistance and move toward this upper range, then into this high volume zone near 196. And for a negative reaction, look for the price to move to this high volume zone and into this lower range. Then we'll watch if it will find support from the support zone down here near this 183.50. Here's the daily chart for Apple. Apple been quite strong recently. It attempted to break this resistance zone near the 166. It is currently sitting between this upper resistance zone near 176 and the lower support zone near 151. The weekly expected move for the upper range is between 170.25 to 168, and the lower range is between 160.40 to 159. Here are the high volume zone for Apple, this huge one between 168 to 152. And there's another one near this 171.70 to 170, just right above this upper range of the expected move. There are three VPOCs near the lower range of the weekly expected move. One of them is near the 160.50, and another one is near 158.30, and another one at 157.25. And there's one near the top of the upper range of the expected move, near the 170 level. I also have a short-term supporting trend line running up to this lower range of the expected move. So for next week, if the market decides to move up on a CPI, then look for Apple to break this resistance and move up to the upper range and possibly test this high volume zone near the 171.70. And if Apple decides to go back down, then look for the trend line near the lower range of the expected move to get tested and possibly continue to move toward the lower edge of this high volume zone. Tesla looked like it did a fake breakout from the resistance zone last week near the 890 level and found seller up here near the 950. And here are the resistance zone for Tesla. Here's the 890 level. This will act as a potential resistance, and also up here at 971. And the support zone possibly down here near this 790. The upper range of the expected move for next week is 930 to 913.70, and the lower range of the expected move is between 815.35 to 802.50. Here are some of the highlighted high volume zone for Tesla for the coming week. It's the 927 to 959, this huge high volume zone. And this one here at 845 to 803. And this one between 758 and 694. Next week, Tesla need to hold this trend line and stay within this high volume zone between 927 and 959. Then watch for it to move up to the upper range and make another attempt to take out the seller up here near the 955 level and basically this low volume zone. If it is unable to hold this trend line, then look for the price to enter this high volume zone near 845 and trace down into this lower range and possibly test for support near this 790, this support level. Now let's go back to the SPY. This time we'll look at the weekly chart. Here we see last week the candle is the smallest candle since last December up here near the high. This candle is called the NR7. It's a candle that had the smallest range in the last 7 period. There are many ways to trade this type of candle, and if you do Google search on NR7, you will find a lot of different trading strategy for this candle. And here's a possible strategy to watch. I'm going to go back to the daily chart to show you. Here's the low of last week, and here's the high of last week. I'm going to use one of my Fibonacci retracement to set up the level to watch. So if the price go above last week's high, then that will trigger a watch for a 1x of last week's range, basically between the high and the low. This 1x move up as the first target level. Then once it get to 1.5x of that range, then the stop will be moved to this 1x, or could be on a break even depending on your risk tolerance. Similarly, vice versa for the price dipping below the low of last week, then we're basically watching for a move to go down 1x of the weekly range, last weekly range as the first potential target. Then set it up on 1.5R. If it trades down to 1.5x of the weekly range, then you can set the move your stop to 1x or to a break-even stop. So that's basically one of the trade strategy one could use on trading this possible NR7 type of candle. Now, just a disclaimer, this is not financial advice. Make sure you conduct your own due diligence and be sure you understand the risks in trading and investing in the financial market. All the information in this video are for educational purposes only. They are not investment advice. And be sure to smash the thumbs up to help promote this video on YouTube. Thank you for watching and stay safe.